Thank you. Kalau gitu kita mulai aja kali ya. Saya izin share screen ya. Oke, udah kelihatan belum? Halo? Tes. Kedengeran kan? Halo?
Kedengeran, Kak?
Oke. Udah kelihatan kan screen share-nya?
Kelihatan.
Oke. Ya udah. Kalau gitu kita mulai aja. So let's start. So today in an economically feasible way to a particular object, and the second one is indirect, which is cost that can't be traced in an economically feasible way. Now, usually the factors affecting this classification is the materiality of the cost, the available information gathering technology, and design of operations. Now, aside from those two different types of costs, there are a few other types of costs that we will have to remember throughout this cost accounting course. All right, the first one is inventoriable and period costs. Okay, so inventoriable costs, simply put, is all costs of a product that are considered as assets in a balance sheet when the costs are incurred. Or to be simple, it's usually costs that are expensed as COGS or cost of goods sold. Whereas the opposite of inventoriable cost is period cost. Period cost is literally all costs in the income statement other than the cost of goods sold. Now, aside from inventoriable and period costs, we will also learn about prime and conversion costs. So what is prime cost? Prime cost, to be direct, is literally direct manufacturing costs. So in this case, from what we will learn, prime cost will consist of direct manufacturing costs and direct material costs and direct manufacturing labor costs. Whereas conversion costs will be all manufacturing costs to convert direct material into finished goods. Or if you if it's converted into formula, it will be direct manufacturing labor costs plus manufacturing overhead costs. Now that's a little bit of types of costs. Now throughout this course, we will also have a few basic assumptions on costs. The first one is that variations in the cost driver is a variable that causally affects cost over a given time span, can explain the variations in related total costs. The second one is that a cost can be approximated by a linear cost function within the relevant range. Now, aside from that, we will also learn about a few essential cost estimation methods. So there are four different types of cost estimation methods. The first one is industrial engineering. In industrial engineering, we analyze costs based on the input and output in physical terms, or practically the physical relationships. And then the second one would be the conference method. Just like its name, it's practically a consensus where experts gather and decide how to estimate the cost. The third one is the account analysis method, which we will mostly use later, in which we classify various cost accounts. This is the mostly used method as it is cost effective. And the last one is the quantitative analysis method, where we use formal mathematical method and uses past data. Now, in the quantitative analysis method, it can be divided into two distinct methods. The first one is the high-low method, where we can calculate or estimate a linear function for cost using the difference in cost between the highest and lowest data of the cost driver. And the second one is the regression. Regression measures average amount of change in the dependent variable associated with the independent variable. Uh, the regression method tends to be very hard to be calculated manually. So usually, even if it's calculated, people would use Excel. So usually, at the very least, in the exams, you won't be asked to calculate regression manually. Usually, it will be stated in the problem, which we can see later in the problem set. So let's just jump into the problem set. Let's go and do problem one. Okay, so problem one. Schaefer's manufacturing costing system uses a three-part classification: direct materials, direct manufacturing labor, and manufacturing overhead costs. What this means is that Schaefer divides costs into three distinct categories, which is direct manufacturing labor, direct materials, and manufacturing overhead costs. Then we have a set of data here, which is like beginning inventory, ending inventory, etc. And here are the questions required. Prepare Schaefer's supporting schedule of COGM. COGM is cost of goods manufactured and income statement. Calculate the total prime cost and total conversion cost, and calculate the total inventoriable cost and period cost. Okay, so for the first one, supporting schedule of COGM. Just like its name, supporting schedule of COGM is practically a schedule to help us calculate the total amount cost of goods manufactured. So we can just jump in. Here in the answer sheet template, sorry, I've pasted the data from the question. Now here is the template for the cost of goods manufactured. Now, because Schaefer's uses three distinct categories, we also divide them into three: direct material costs, direct manufacturing labor, and indirect manufacturing costs or manufacturing overhead. And then we'll be able to calculate cost of goods manufactured from it. So first we need to decide, or we need to calculate how much is the direct material cost. To do so, first we need to know the cost of direct materials available for use. To find that, we just add beginning inventory and direct materials purchased. Here, they're both already prepared, or it's already given by the question. And here is 34. This is shown by the data from the question. And then the next one, direct materials purchase, is also 88, which is also shown in the question here. Now we just need to add them and we'll find the cost of goods available for use. In this case, it's $122. Next, we need to find the amount or the cost of the direct materials used, right? To do so, we just need to subtract cost of direct materials available for use with the ending inventory of the direct material. In this case, the ending inventory is also already stated in the question, which is practically $4. It's above here. Okay. Now that means from that we can already know that the direct materials used will be 122 minus $4, which is okay, $118. Now next we need to find about the direct manufacturing labor cost. Okay, so in this case, this time we don't need to calculate as the direct manufacturing labor cost is already stated here. Direct manufacturing labor, $40. So we just need to put that, sorry, this is right here. Okay. Now for the indirect manufacturing cost, we'll need to sum up all the indirect manufacturing costs we can identify. So from here, we need to identify which ones are considered indirect manufacturing costs. Okay, so the first one, plant utilities. Yes, plant utilities tend to be an indirect manufacturing cost, so we will include that. Then indirect manufacturing labor is pretty straightforward. It is an indirect manufacturing cost. Depreciation, plant and equipment is also considered an indirect manufacturing cost since it is indirectly related to the process of the production. Miscellaneous manufacturing overhead, also the same thing. But marketing, distribution, and customer service cost is not an indirect manufacturing cost. It is more of operation cost or period cost. Okay. Direct materials purchase is direct materials. Direct manufacturing labors for direct manufacturing labors. Plant supplies use, it's considered one as an indirect manufacturing cost. Property taxes on plant as well is considered as an indirect manufacturing cost. So all we need to do is just include them in the supporting schedule. So just copy paste all the data from the question. We'll get $8, $21, $6, $15, $9, and $2. And if we sum them up, we'll get $61. Now from there, from these three data, if we add them up, we'll be able to find the total manufacturing cost incurred. So we will know the manufacturing cost incurred for this period. So we just sum them up and we'll get $219. However, what we're trying to find is cost of goods manufactured, or practically the cost of goods which has been transferred, completed and transferred to the ending finished inventory or to the finished goods inventory. So to find not the cost incurred, but the cost of goods manufactured, we would have to add the value of the beginning work in process inventory to the manufacturing cost incurred cost and deduct it with the ending work in process inventory. So this data is already given by the question. So we just simply need to add it, $10, 219 plus $10, and we'll get the total manufacturing cost to account for. Then we deduct it with the ending work in process inventory because we want to know the cost of goods manufactured, which is already transferred to the finished goods inventory. It's $5 based on the question. It's right over, where is it? Here, there we go. And we'll get the cost of goods manufactured for $224. Now, the question also asks us to make an income statement. So we'll just make a simple income statement quickly. Here's the template. So the first of all is the revenues. The revenues is already provided by the question. So we just need to copy paste it and we'll get the revenues of $359. Then of course, we'll need to find the cost of goods sold. To find out the cost of goods sold, we'll need to know the cost of goods available for sale and the ending finished goods. Now to find the cost of goods available for sale, we need to know the beginning finished goods inventory and add it with the cost of goods manufactured. In the question, the beginning finished goods is already stated, which is $46. It's, where is it? Here we go, it's this one, $46. Then the cost of goods manufactured will take the value from our supporting schedule, which is $224. Both of them will become the cost of goods available for sale, which is $270. Then to find the cost of goods sold, we'll need to subtract it with the ending finished goods. It's also available in the information. Ending finished goods, December 31, 2017, which is $16. 270 minus $16 will get $254. And then we'll have the gross margin or gross profit, same thing, which is revenue minus cost of goods sold. Now the value will be $105. Now, of course, don't forget, in the question it is provided marketing, distribution, and customer service costs. It's practically the operation or period costs. So we'll have to minus the gross margin with this period cost to find the operating income. So the period cost is 90, subtract it, we'll get an operating income of $15. Okay, that's for number one. Oh, by the way, if there's any questions, feel free to ask, yeah. Don't mind, yeah, don't be scared to interrupt. Okay, next one. The question two, calculate the total prime cost and total conversion cost. Okay, as mentioned before, prime cost refers to the direct manufacturing cost. Or to be simple, the formula for prime cost is just direct materials plus direct manufacturing labor. So here, we will add direct manufacturing labor, which is 40, plus direct materials, which is $118. And then we'll get $158. That's for prime cost. Next, we are asked to find the conversion cost. Conversion cost, once again, is practically all manufacturing costs required to convert direct material into finished goods. So it's practically manufacturing costs except without the direct materials. So conversion cost will be direct manufacturing labor plus indirect manufacturing cost. In this case, it's $40, just direct manufacturing labor, plus indirect manufacturing cost, or $61. We add them both and we'll get $101. Now, the third question, we are asked to find inventoriable costs and period costs. Okay, once again, as mentioned before, inventoriable cost is all costs of a product that are considered assets in a balance sheet, or practically it's cost of goods sold. So all we need to do is just find the inventoriable cost, and we'll be able to get manufacturing $219, or manufacturing costs incurred during 2017. That's for inventoriable costs. For period costs, is practically all costs in the income statement other than cost of goods sold. Once again, the only cost that's not considered cost of goods sold in this question is the marketing, distribution, and customer service costs. So it will be $19. Period cost will be $19. All right, that's for problem one. Is there any questions so far? No. Okay. If not, we'll continue to problem two. Problem two is also still considered somewhere in the range of chapter 1, 2, and 10. Or actually, specifically, it's chapter 10. Okay, so we'll go to problem two here. Catherine McCarthy, a manager in Baxter Arena's selling division, is checking to see if there's any correlation between promotion costs and ticket revenue for the sports stadium. She obtains the following data for the past 9 months. So we have data for the month, ticket revenue, and promotion costs. She predicts a regression equation as such. Okay, so we are already given an equation for the regression analysis. And here are the questions required. Plot the relationship between promotion cost and ticket revenue. Include the regression line and evaluate the graph based on its economic possibility, goodness of fit, and regression line gradient. 2. Using the high-low method, formulate a function for the relationship between promotion cost and ticket revenue. 3. Using the regression equation and function from the high-low method, what is the increase in ticket revenue for every $1,000 spent on promotion cost in the relevant range? Which method should Catherine use to predict the effect of promotion cost on ticket revenue? All right. So in here, we need to know which one is the dependent variable and which one is the independent variable. In this case, it's checking to see if there's any correlation between promotion cost and ticket revenue. All right, in this problem, we can assume that ticket revenue would be the dependent variable, whereas the promotion cost will be the independent variable. So let's just jump straight to it. All right, so I copy pasted the data from the question, and if you guys plot a graph, you'll have a similar graph like this. So since this manual, I've done it automatically in Excel. You'll get a graph somewhere similar like this. And here in the question, we are asked to evaluate the estimated regression equation using the criteria of economic plausibility, goodness of fit, and slope of regression line. Okay, so what is economic possibility? Economic possibility is practically a criteria to ask whether promotional costs and revenue does have a relationship, whether it's possible for us to assume that they do have a relationship. In this case, since we can clearly see a upward sloping line and it's not scattered, the dots are not scattered, we can say that it is economically possible that promotional cost appears to be a cost driver of revenues or appears to affect revenues. Same thing. In this case, the higher the promotional cost, the higher the revenues, as can be seen in the graph. Now, all right, next one, we have goodness of fit. So what does goodness of fit measures or ask? Well, goodness of fit measures how strong the relationship is or how strong is the correlation between cost and revenue. In this case, we can measure goodness of fit based on how close the dots are to the estimated regression line. In this case, we can see that the dots are very close or pretty close to the regression line. So we can say in terms of goodness of fit that the vertical differences between actual and predicted revenues appears to be reasonably small. Therefore, it indicates that promotional costs are strongly related to ticket revenues. That's for goodness of fit. Next is slope of regression line. So the slope of regression line tends to measure the coefficient between the revenue and costs. Whether the cost will whether a small change in cost will create a big change in revenue or it will not. Now, in this case, as we can see, the slope is quite steep. So we know that a small change in cost will cause a relatively big change in revenue. So in this case, for the criteria slope of regression line, we can say that the slope appears to be relatively steep. Therefore, change in promotional cost does significantly affect revenue. So that's for the first problem. For problem 2, first question for problem 2. Next question, number 2, using the high-low method, formulate a function for the relationship between promotional costs and ticket revenue. Okay, as mentioned before, in the high-low method, we will estimate a linear cost function based on the highest and lowest data point of the cost driver. Maybe it'll be a bit easier to understand by doing the problem. So in this case, I've copy pasted data as well. We need to find out which one is the lowest and highest data in terms of the cost driver or in terms of the independent variable. In this case, the advertising or promotional cost with the lowest data is 52,000. So we mark this as the lowest. Now, whereas the highest would be at December, where the advertising cost is 197,000. So we would mark that as the highest. Now, using the high-low method, we will need to estimate the slope or the coefficient of the linear equation using the following formula: difference in cost, here it is, difference in y line or difference in cost between the highest and lowest data point divided by the difference in quantity or the difference in x line between the highest and lowest data point. In this case, let's just plot our data first. So our highest data has an advertising cost of 197,000 and a revenue of 751,000. And the lowest has an advertising cost of 52,000 and a revenue of 200,000. So we can calculate the difference here. So in here we'll have a difference of the x line of 145,000 and a difference of a y line of 551,000. So to estimate a linear equation using the high-low method, once again, we need to first find the coefficient b. To do so, we can use the following formula. So we just copy-paste the formula, which is 551,000, difference in y or independent variable in the highest and lowest data point, divided by the difference in the, sorry, this one is dependent variable, divided by the difference in the independent variable in the highest and lowest data point, which is 145,000. And if it's calculated, we'll get a slope of 3.8. Okay, so from there, we can estimate the constant A using now the point that we need to use is either the highest or lowest. We can use either the lowest or the highest, but we cannot use any other data points because it will result in a different or incorrect equation. So make sure when you guys try to find the constant A, make sure the point used to find the constant A is either the highest data point or the lowest data point. In this case, I use the highest data point. So I can make a formula, which is revenue. The highest data point in revenue is 751,000 equals to A plus 3.8, the coefficient we have estimated using the high-low method, times by the advertising cost in the highest data point, which is 197,000. Using this formula, we can calculate A as 2,400. Now, since we already get A and B, we can already estimate or make a distinct linear equation for the cost and revenue, which is this. So this is our answer for number 2. Revenue equals to $2,400 plus 3.8 times advertising cost or promotional cost. All right, that's for number 2. Now for number 3, using A, the regression equation, B, function from the high-low method, what is the increase in ticket revenue for every 1,000 spent on promotion cost in the relevant range? Which method should Catherine use to predict the effect of promotion cost on ticket revenue? Okay, so we're asked with every 1,000 change in X or promotion cost, how much is the change in ticket revenue? So to find the answer, it's easily just the coefficient times $1,000. But since we are asked for 2 scenarios, we'll provide for both. So the first one will be the regression equation. Here we can see the regression equation as ticket revenue equals to 65,583 plus 3.54 times promotion cost. Now, if there's 1,000 difference or 1,000 change on promotion cost, 1,000 increase in promotion cost, we know that the ticket revenue will increase by 3.54 times, of course, the difference or the increase $1,000. Which is why we can get the answer to be $3,540. Or it's practically just the coefficient times the change in X. Now the same goes for the high-low method. The only difference is that we use the high-low method equation, or we use the linear equation we got from the high-low method, which is revenue equals to 2,400 plus 3.8 times advertising cost. In this case, we will get the answer to be 3,800 because as usual, it's just the coefficient times the change or the difference in X, in which the change in X was 1,000. So this is our answer. Now we are also asked which method to choose. Well, in general, the best method to use is the regression line because the regression line factors in all the data sets. Whereas the high and low method, we only use the highest and lowest data set, which is relatively inaccurate compared to the regression analysis. That's why SHALP should use the regression equation because it uses information from all observation. The high-low method, on the other hand, only relies on the observation that have the highest and lowest value of the cost driver. And these observations are generally not representative of all the data. Okay, that's for problem 2. Now, problem 3. Before we get to problem 3, I'll be explaining a little bit on job costing or a little bit of theory on job costing. Well, job costing does not have a lot of theories. It's mostly practical. So maybe a few important theories is that we use the job costing system to allocate costs when our business model has multiple units of distinct products or services. In comparison to process costing, we'll use process costing when our business model produces masses of identical units of products or services. But in job costing is when like our business model produces distinct products or services. These distinct products or services we will call as jobs. Now, job costing has theoretically two different methods, which is normal costing and actual costing. So what's the difference? Well, as mentioned before, there are two different types of costs, right? Direct and indirect costs. Now, in normal costing, we estimate indirect costs. So we use budgeted indirect cost rates to calculate indirect costs. Budgeted indirect cost rate, just remember the formula is budgeted annual indirect cost divided by the budgeted annual quantity of the cost driver. But although it uses budgeted indirect cost rate, normal costing uses actual direct cost rates. Now, the second method, the theoretically plausible second method, is actual indirect cost rate. Now, the difference is that actual costing. The difference is that actual costing uses actual indirect cost rates. So instead of budgeted indirect cost rate, we use actual indirect cost rate. The formula is similar. It's just actual annual indirect cost divided by actual annual quantity. And also they also use actual direct cost rates. So usually in general or applicable or in real life, normal costing is widely used. Why? Because people tend to cannot predict, or managers, or let's say it's hard to predict indirect costs. It's hard to get the data or accurate information on indirect costs before it actually already happens. That's why usually to predict future costs, managers tend to use budgeted indirect cost rates instead of actual indirect cost rates. So how can they use actual direct cost rates? Because like as mentioned, direct cost rates or direct costs are economically feasible to be traced. So they can easily be traced and they can easily be calculated along the way. While indirect costs are not, they are harder. That's why in real life, they tend to use normal costing where they tend to budget or predict the indirect cost rates. Now, okay. Now, if we use normal costing and if we predict the budgets or we predict the direct costs, there of course there will be errors, right? Or differences in the predicted one and the actual one. Now, those differences we call are under or over allocated indirect costs, which is the formula is just actual indirect costs minus allocated indirect costs. Now, to adjust this difference or to erase this under or over allocation, there are three methods to do so. The first one is the adjusted allocation rate. So this one is like we restate all overhead entries using actual costs. We won't actually be tested on this method. This is just a theory to remember. This is mainly used if we already have some kind of accounting software where we can just, they tend to have like a certain program to just retype the amount and it will all be adjusted, or all the accounts will automatically be adjusted. However, the methods that we will be tested on are the proration and the write-off to cost of goods sold method. So the proration method, the theory is that we spread the under or over allocation of indirect costs to the work in process inventory, to the work in process goods, finished goods, and cost of goods sold based on a certain criteria or driver, which it depends on the question later or it depends on the situation. Now the last method is write-off to cost of goods sold. This is practically the most simple method, where all the under or overallocated indirect costs, we just allocate them all to cost of goods sold, compared to the previous method proration, where we will divide it between work in process, finished goods, and cost of goods sold. Okay, so let's just jump into the problem to get a taste. So problem 3, Zaf Radier Company uses normal costing in calculating overhead costs and uses machine hours as the cost allocation base. Data for 2017 is as follows. So here we have a few data, which is the budgeted overhead cost, the cost allocation base or cost driver, which is machine hours. Then we have the budgeted machine hours. Then we have the actual overhead cost and actual machine hours. Sorry. Data on machine hours and ending balances before proration on under or overlocated are as follows. So we are also provided with ending balances here. Now let me have a drink. Okay, so the question asks, first, calculate the budgeted overhead rate for 2017. And the second, calculate the over or under allocated overhead costs for 2017. And we are asked to dispose the over or under allocated costs using the following methods. Okay, so here we have the write-off to cost of goods sold method. Then we're required proration based on the ending balances. So this is based on the ending balances. And we have the proration based on overhead allocated. All right, so let's start finding the answers. Okay, so I've copy pasted the important information as well. Now, first we are asked to find the budgeted MOH rate or the budgeted overhead rate. To do so, just like mentioned or just as I mentioned before, the formula is budgeted annual indirect costs, or in this case, budgeted MOH costs, divided by the budgeted annual quantity of the cost driver. In this case, the cost driver or cost allocation base is the machine hour. So we divide it by the budgeted machine hour. In this case, we just need to copy paste the data from the question. We already have 4,800,000. It's right here. 4,800,000. And we have budgeted machine hours of 80,000. It's in the questions as well. So easy enough, we just divide them and we'll get the budgeted MOH rate of $60 per machine hour. Just remember this per machine hour. This is per machine hour as well. Now, the next question, that was the first question, simple enough. We're supposed to calculate the over or under allocated overhead costs. Once again, the formula for under or over allocated indirect costs is actual indirect costs minus allocated indirect costs. To find allocated indirect costs, the formula of allocated indirect costs is simply the budgeted indirect cost rate divided by the actual cost allocation base, actual quantity of cost allocation base. In this case, we are already provided with the information, so we'll use the budgeted MOH rate as the one we found in question 1. And we already have the information actual machine hour used, which is 75,000. So to find the budgeted MOH cost allocated, oh sorry, why is this divided? Sorry, this times. My bad. Sorry. Okay, we just need to multiply the budgeted MOH rate with the actual machine hour used. In this case, we will get 4,500,000. Now, in this case, we have actual MOH cost incurred 4,900,000. So the actual cost incurred is 4,900,000, while we only allocated 4,500,000. So we know that this is under allocated by 400,000, or the difference in both of them. Now this 400,000. So the answer for 2A, or the first part of question 2, is that it is under allocated by 400,000. Now we are asked to dispose the over or under allocated cost using the following methods. The first one is the write-off to cost of goods sold. Simply enough, we just need to allocate all this 400,000 to the cost of goods sold. Here, first we'll need to list all the ending balance before proration. And then we'll need to allocate the over or under allocated. add text. Okay. And then we'll need to find the balance after. Okay, in this case, it's already clear. In this case, we know that the underallocated MOH is 400,000. And in this method, we allocate all of it to the cost of goods sold. So we just simply add all of the total underallocated to cost of goods sold. So we'll have the ending balance hereafter, like this ending balance after proration. Now in the question, we're also asked to make the journal entry, if I remember. Okay, no, never mind, it's not asked, but if we had to make a journal entry, remember it would be debit MOH allocated, debit cost of goods sold, and credit MOH control. Okay. So, okay. The logic here is that since MOH allocated is under allocated, we need to allocate the remainder into the cost of goods sold, or the difference of the MOH control to the cost of goods sold. In this case, the MOH allocated was 10 million. The cost of goods sold is 400,000, while the MOH control is 10,400,000. Okay, so that's the journal entry. Next is the proration based on ending balance in 2017. All right, so in proration, unlike the write-off to cost of goods sold, we allocate the under or over allocation MOH to these three accounts. Now, how much is the proportion allocated to each account? Now, this depends on the base you are using or on the, let's say, factor we're using. Now, in this case, let's say it's based on ending balance. So we use ending balance as the proportion to allocate under or over allocated MOH. In this case, we list each ending balance, and then we will have to find the percentage of each ending balance compared to the total ending balance. In this case, let's say work in process has 750,000. So it has a percentage of 750,000 divided by 10 million, which is, this is not in percentage yet, 7.5%. Well, this would be the same thing for the rest. This will be 12.5. And this will be 80. Okay, so based on this percentage, we will allocate the manufacturing overhead. So in this case, simply just multiply 7.5% with 400,000. So if we multiply 7.5% with 400,000, we'll get 30,000, and so on and so on, until we need to make sure that the total is still 400,000. Then all we need to do is add the allocated or the disposable under or over allocated MOH to the ending 2017 balance. And we'll get the ending 2017 balance after proration. Now, okay. Next one is proration based on MOH allocated to ending balance. Yeah, in this case, it's proration based on overhead allocated this before proration on the ending balance of WP control. Okay. All right. So this time, this is based on the MOH allocated in each account balance. So we're asked to find the MOH allocated in each account first. So before we get to here, we need to calculate the MOH allocated. Now, exactly how do we do that? So MOH allocated, once again, the formula is budgeted MOH rate times the actual allocation base incurred. And in the problem or in the question, we already have the allocation base for each account. In this case, that work in process consumes 4,000 machine hours. Finished good consumes 11,000, whereas cost of goods sold consumes 60,000 machine hours. If you see their total is equal to the total actual machine hours. Now, so based on that, we'll be able to count the MOH allocated in each account. So once again, the formula is just budgeted MOH rate, which is the one we get for answer question number 1, 60. per machine hours times the actual allocation base for each account. In this case, for example, work in process uses 4,000 machine hour. So the MOH allocated is $60 per machine hour times 4,000 machine hours. In this case, it's 240,000. The same goes for the finished goods, $60 per machine hour multiplied by this 11,000 machine hours. We'll get 660,000. And the same goes for cost of goods sold, in which we'll get $3,600,000. Okay, so now we already have the data for the MOH allocated. All we need to do is put it in a table, and we'll get a total of 4,500,000 MOH allocated. If you see, of course, it's the same as this one, MOH allocated. Now, from this data, we'll need to find the percentage of each of them. In this case, we'll need to find the 240,000 divided by 4,500,000 to get the percentage of MOH allocated in work in process. In this case, if we turn it into percentage, we'll get 5.33%. And then 660,000 divided by 4,500,000. Then we'll get 14.67%. And for the last one, cost of goods sold, we'll get 80%. Now, once again, we multiply this percentage to the under or over allocated MOH, in this case, 400,000. 5.33% times 400,000 will get 21,333, and then so on and so on, until we need to make sure once again that the total is 400,000. And then with this proration data, we add it to the ending balance before proration to get the ending balance after proration. And then this will be the final answer. Yeah. Okay. Right. All right. That's practically for problem 3. Now, problem 4, we will be going to process costing. So maybe I'll explain a little bit of the theories on process costing. Okay. So process costing is practically, it's not really the opposite, but it's a different approach to allocating costs in compared to job costing. In process costing, or we use process costing to allocate costs when our business model produces masses of identical units of products or services. Now, there's not a lot of theory in terms of process costing, but in essence, to calculate and allocate costs in process costing, we will first need to find the equivalent units. What is equivalent units? Equivalent units is practically units in terms of work done. Its definition is units in terms of work done. So we calculate units based on the percentage of work done to it, not based on the physical units as we usually do. So that's equivalent units. Now, in process costing, there are 2 different methods that we'll be using. The first is the weighted average. So weighted average calculates cost per equivalent unit of all work done today. So what it means is that weighted average calculates all the costs of work done to date. So it includes the beginning work in process and divide the cost of the beginning work in process based on the equivalent units. The next one, the second method, is FIFO, or first in, first out. In this case, it calculates the cost per equivalent unit of the cost added in the period. Why? Because in FIFO, it is assumed that the beginning WIP will be completed first and transferred out first, compared to weighted average where they're all mashed in and just divided. But in FIFO, we assume that the beginning work in process inventory will be completed first and will be moved out first. Hence, we will distinct or classify beginning WIP differently in FIFO. Now, usually in process costing system, we'll have to calculate cost based through 3 different categories. Usually 2, but it can be 3. So it's direct materials. The first one is direct materials. The second one is conversion cost, and the third one would be transferred in cost. So transferred in cost is quite unique, in which we just treat transferred in cost usually as a separate type of direct materials added at the beginning. I'll elaborate more on that as we go on the problem. But in essence, just treat transferred in cost as a separate type of direct materials when we are doing the answers, or when we're doing the schedule and calculating the cost. However, make sure that just remember that since transferred in cost is treated as a separate type of direct materials that is added at the beginning, so the key phrase is added at the beginning, the degree of completion in transferred in cost will always be 100%, no matter what. So like it will always be 100%. So in my opinion, to get a better grasp of process costing, we'll just jump into the problem set. So we'll start. Problem 4, Larson Company. Larson Company, as you know, is a manufacturing of car seats. Each car seat passes through the assembly department and testing department. This problem focuses on the testing department. So this time we'll be calculating the cost and equivalent units from testing department. Direct materials are added when the testing process 90% complete. Okay, so we've been given information that DM is added in the 90% of the process. What this means is that if the work in process inventory have exceeded 90%, that means we know that direct materials have been added. Next, conversion costs are added evenly during the testing department process. Sorry. This one is pretty simple. So this means that conversion costs, or the percentage of completion of conversion costs, is proportional and equal to the degree of completion of the process, since this is added evenly during the testing department. As work in assembly is completed, each unit is immediately transferred to testing. Here, this the key point. That means we'll know we'll have transferred in cost. As each unit is completed in testing, it is immediately transferred to finished goods. Okay. So for the first one, Larson Company uses the weighted average method of process costing. Data for the testing department for October 2012 are as follows. Okay, so we have physical units, 7,500, transferring cost, direct materials, and conversion cost. So here are the questions. What is the percentage of completion for A, transfer in cost and direct materials in beginning work in process inventory, and B, transferred in cost and direct materials in ending work in process inventory? Okay. 2, for each cost category, compute equivalent units in the testing department. Show physical units in the first column of your schedule. Okay. 3, for each cost category, summarize total testing department cost for October 2012. Calculate the cost per equivalent unit and assign total cost to units completed and transfer out and to units in ending work in process. And 4, prepare journal entries for October transfers from the assembly department to the testing department and from the testing department to finished goods. Okay, then we have additional information, which we will see later. Since this is a different problem, or we can categorize it as problem 4B. Okay, so we'll tackle this one by one. Okay, the first one is, what is the percentage of completion for transferred in cost and direct materials in beginning work in process inventory? Okay, so the key phrase this time is beginning work in process inventory. So we need to find out the percentage of completion. All right, once again, transferred in cost will always be 100%. So for the answer for transferred in cost is percentage is 100%. So the percentage of completion for transferred in cost is 100%. But for direct materials, here we can see that the direct materials are added when the testing department process is 90% complete. Now, but from the information given, we see that the beginning work in process is only 70% complete. We'll use the conversion cost as a reference here. So in here, beginning work in process is only 70% complete. So we know that direct materials have not been added at all. So the percentage of completion for direct materials in beginning work in process inventory is 0%. here. Okay, so transferred in costs are 100% complete, direct materials are 0% complete. Now that's for the beginning inventory. How about for the ending? Once again, transferred in cost is always 100%. So yes, the answer to transferred in cost will always be 100%. How about the direct materials? Once again, we can see in the data given, this time ending work in process inventory is 60% complete. But since it's only 60% complete, it has not, or direct materials have not been added yet, as direct materials are added when it is 90% complete. So once again, the answer is the same as A. Transferred in cost is 100% percentage of completion, while direct materials only have 0% percentage of completion. So here, in both beginning and ending work in process. The reason is that transferred in costs are always 100% complete as soon as they are transferred in. So just remember, it's always 100%. While direct materials are 0 because materials are only added 100%, while they are only 70 and 60% complete units in beginning. Yeah. Okay. Okay, so that's the answer for number 1. Okay. All right. Next, we'll be going to number 2. For each cost category, compute equivalent units in the testing department. Show physical units in the first column of your schedule. Okay. So here I already have a template of the schedule. So remember, first we'll need to find the equivalent units, which is practically the units of work done for the process. In this case, first we use our physical units as a reference. So just input the data that we already have. In this case, we already have work in process beginning 7,500, as stated in the question. And then we already have transferred in during the current period 20,500, and we have to account for 30,000. Transferred during the period should be here. Where is it? 20? Yeah, okay. 22,500 we get from 500. The formula is practically complete during October 2012 plus work in process October 31 minus the work in process in October 1. So practically, since we know the total amount of physical units available, we just need to minus it with the beginning work in process to find how much did we start in October 2012 or transfer in during the current period. 100 plus 3 minus 700. Okay. Then we'll have to account for, we have a total of 30,000 units to account for. Okay. Now, how much is completed and transferred out during the current period? This time it's stated complete during October 2012 to 26,300. Whereas the way pending is also stated 3,700. Once again, we need to make sure that the amount of units we account for and accounted for are equal. This one needs to be equal. Okay. Now we need to know, or we need to calculate the equivalent units, or practically the work that we did on this process on this current period. Okay. So the first one, we need to know the equivalent units for the completed and transferred out during the current period. In this case, since it is completed and transferred out, and we are using weighted average, everything in completed and transferred out during current period means that it is already 100% complete, right? That means we know that all of the work done is 100% complete. So all we need to do is just simply physical units times by 100%. And we'll get equivalent units for transferred in cost, direct materials, and conversion costs, since this is completed and transferred out during current period. And remember, since we are using weighted average, we assume that beginning work in process inventory is considered as completed and transferred out, or we classify them as one in weighted average. Now, how about the work in process ending? Now, we need to find out the equivalent units. We need to find out the degree of completion for the work in process ending. Okay. Once again, the first one, the transferred in cost is always 100% complete. So it's just 100% times the physical units. In this case, it's 3,700. How about the direct materials? Well, since ending work in process is only 60% complete, direct materials have not been added at all. So it's 0% done, or we have not added direct materials at all. So it's literally just zero. How about for conversion cost? Well, we know for conversion cost that it is exactly 60% done. So the equivalent units or the units in terms of work done is essentially 60% times the physical units. Or in this case, we will have 2,220. And now we can sum them up all together. We'll get 30,000 for transferred in cost, direct materials 26,300, and conversion cost 28,520. Another thing to note is to remember that the equivalent units in transferred in cost will always be equal to the units accounted for and the units to account for. If these three are not equal, then yeah, you will probably have to recheck again as there's probably something wrong or something incorrect. Okay, that's for the equivalent units. Now, since we already know the equivalent units, we can allocate and calculate the production cost. Okay, so first we need to know the production cost for the work in process beginning and the cost added in the current period. This is actually, all of them are actually already provided in the question. So let's just see here. Where is it? All right, here is work in process. We're already given the cost for the work in process. In this case, transferred in cost is 2,932,500. This one here. And then direct materials is zero, as it's not yet added, right? Since direct materials is added at 90%, but beginning work in process is just 70% done. So there's no cost yet as it's not added yet. Whereas the conversion cost is 835,460. Okay, it's here. Now, if you sum them up, we'll get total production cost of 3,767,960 for work in process beginning. Okay, how about the cost added in current period? It's also mentioned here or given in the question. So we just need to input them one by one. So we'll get transferring cost of 7,700,000, direct materials of 9,700,000, and conversion cost of 3,900,000, to which all of them will sum up to a total of $21,378,100. And then beginning work in process and cost ended in current period will sum up to be, or we will add them to be total cost to account for, or practically they're both the total cost to account for. And we'll get, if we sum them up, we'll get 25 million, 10,650,000, and 74,000, 4,791,000. Now, this is the distinct feature of weighted average. In weighted average, we divide cost incurred to date, this is the key phrase, cost incurred to date, with the equivalent units. What is cost incurred to date? Cost incurred to date is practically total cost to account for. We'll see that this will be different in Fifo later, as we will compare it and do it later. But essentially, the distinct feature of weighted average is that we add all the costs from the way pay beginning and transferred in during the period and divide them with equivalent units. So this is cost incurred to date. We'll see that it's 10,650,000. It's practically equal to the total cost to account for. It's also 9,700,000. There's 4,791,000. How about for the equivalent units? Well, since we already made the table for equivalent units, we just need to place them here. This time transferred in cost has an equivalent unit of 30,000. Direct materials, 26,300. Conversion cost is 28,520. With these two data, we will be able to get cost per equivalent units, which is practically cost incurred to date divided by equivalent units. So we'll know that the cost per equivalent unit of transferred in cost is $355. For direct materials, $369, and for conversion cost is $168. Okay, so these are the important data. Now we will use this cost per equivalent units to allocate the total cost to these various accounts. The first one is completed and transferred out. Then the next one is to work in process ending. So how do we allocate them? Simply, we just multiply cost per equivalent units to the equivalent units done on each account. In this case, the equivalent units done for transferred in cost on completed and transfer out during the current period is 26,300, right? So all we need to do is multiply 26,300 with $355, and we'll get a total cost of 9,336,500. The same goes for direct materials. Just multiply it with the equivalent units in the completed and transferred out row with $369, and we'll get $9,704,000. Same thing applies to conversion costs as well, and we'll get $4,418,400. And we'll get a total sum of $23,459,600. Okay. Next, we will find the allocation for the one to work in process ending. Once again, the process is practically the same and intuitive. We just multiply the cost per equivalent units to the equivalent units in this account or in WP ending. In this case, for transferred in cost for work in process ending, we have a total of equivalent units of 3,700. So we multiply $355 to the 3,700, and we'll get 1,313,500. Same thing goes for direct materials once again. This time, since work in process have not added direct materials, there's 0% work done, right? And the equivalent unit for direct materials for WP ending is 0, right? So this time, the cost allocated is practically 0. And same thing goes for conversion cost. We'll get 372,000 minus 60,000. Okay. Then if we add them up, we'll get a total sum of 1,686,460. Okay, so this is the total sum. So our total cost accounted for is $25,146,060. Now, this is the same for all transferred in cost, direct materials, and conversion costs. Now, one thing to note is, although it's not necessarily, this criteria does not necessarily mean your answer is right, but for your answer to be right, it needs to meet this criteria. What is the criteria? That is that the total cost to account for needs to be equal to the total cost accounted for. This is the same. So for transfer in cost, total cost to account for must be equal to total cost accounted for. The same goes for direct material as well. Same goes for conversion cost as well. So make sure that your total cost to account for is equal to the total cost accounted for. If not, that means there must be a mistake somewhere. Uh, that's for weighted average. Now we're also asked to make the journal entry for, let's see in the question, prepare journal entries for October transfers from the assembly department to the testing department and from the testing department to finished goods. Okay, so the first one is transfers from assembly department to testing department. Second one is testing department to finished goods. Okay, this is pretty simple. To record the journal entry, we need to record the transfer, right, from work in process from the assembly to work in process to testing department. So simply we debit work in process testing department and we credit work in process assembly department. Why? Because we're trying to record the transfer of work in process from assembly department to testing department. How much is the amount? Well, the amount is equal to the transferred in cost in the current period. Since this is asking for the journal for October, right? Or for this current period. So cost added in current period for transferring cost is 7,770,500. So the amount to journal is just 1,500. Now That's for the first journal. And then we're asked to make a journal for the cost of goods completed and transferred out during October from assembly to finished goods inventory. Same principle as we record the transfers from work in process inventory in testing department to finished goods. We debit finished goods and we credit work in process testing department. How much is the amount do we debit and credit? Well, we debit and credit the amount which is completed and transferred out, or the cost that is completed and transferred out from test assembly department. Oh, sorry, this is testing department. From testing department to finished goods inventory. Okay. In this case, it's equal to the total cost completed and transferred out, 23,459,600. Same thing here. Okay. All right, that's for problem 4A. Are there any questions so far, maybe? No? Okay. Feel free to intercept or interrupt if you have any question. So that's for weighted average. Next, we will go to FIFO, or FIFO method for process costing with transferred at cost. So let's just read the additional information. Refer to the above information. Suppose that Larson Company uses the FIFO method instead of the weighted average method in all of its departments. The only changes to problem 1 under the FIFO method are that total transferred in cost of beginning work in process on October 1 are 2,881,000 instead of 2,932,000. And the total transfer in cost added during October are 7,735,000 instead of 7,717,500. Okay, so we'll go on FIFO method, problem 4B. All right, so this is the same question. FIFO method. The difference in FIFO method and weighted average method is that FIFO method differentiates beginning WIP or beginning work in process in inventory with the units that are started and completed in the completed and transferred out during current period. As you can see, this is different in weighted average. In weighted average, they're all clumped together, right? But in FIFO, we differentiate them. Why? Because we assume beginning work in process will always come out first, as in first in, first out, right? So we differentiate them. Okay. So first, once again, we make the table to calculate the equivalent units. We have WIP beginning, transferred in to account for, completed and transferred out. In this case, we classify them into beginning WIP and started and completed. And then we have WIP ending and we have accounted for. Okay. So once again, the physical units did not change, right, according to the question. So we still have a total of 30,000 units to account for. So we need to find out first WIP ending. WIP ending is still the same, so we just type them in 3,700. Now, from beginning WIP, we know beginning WIP is 7,500. So we just calculate 7,500. Now, from these two data, we can already calculate how much units are started and completed, which is practically 30,000. 30,000 minus 7,500 minus 3,700, which is equal to that 18,800. Yeah. So this is the physical units that we obtained. Now, once again, we need to calculate the equivalent units. Now, unlike weighted average, beginning WIP once again is differentiated from started and completed. In this case, we need to calculate the equivalent units from beginning WIP, which is transferred out. Once again, the general principle is transferred in cost is always 100% complete. So for transferred cost, it's just 70,500 times 100%. Times 100%. But in this case, it's zero. Why is it zero? Because it's 7,500 times 100% minus degree of completion. Okay, so general formula. Here we go. Equivalent units. Sorry. Units equals to physical units. Percent minus degree of completion. Okay, why is that so? Because in Fifo, we're trying to calculate the remaining work done needed to finish the beginning work in process. The remaining work done. Remember, because we're trying to calculate the cost in the current period, right? So we need to find out the remaining work done. In this case, since transferred in cost is always 100% at the time, or at least at the time it is transferred in, we know that transferred in cost is already complete at the previous period. So the remaining work done for transferred in cost is practically zero since it's already done in the previous period. Okay, so how about direct materials? As direct materials are not added at all at the previous period, how can we know? We know because the beginning work in process only 70% complete, while it is, direct materials is once again added when it is 90% complete. We know that direct materials have not been added at all. That means to finish the remaining work done, we need to add all direct materials, right? Or we need to do a 100% work done of direct materials. So direct materials 100% times 7,500, which is 7,500. How about for conversion costs? Well, we know that conversion cost is 70%. That means to calculate the remaining work done, it's just simply 100 minus 70%. So we have 30% of conversion cost work left. So we know that the equivalent unit to complete the beginning OIP is 30% times 7,500, which is 2,250. Okay, that's for beginning work in process, which is transferred out. How about for the units started and completed? Well, just like its name, since it started and then it's completed, we know that the work done needed to start and finish it is always 100%, right? So all we need to do is just calculate the physical units multiplied by 100% to find the equivalent units. In this case, they're all 18,800 since it started and completed. So yeah, the logic is that we need to, of course, finish 100% work done to finish a goods that's just started. Yeah, to finish a good that is just started compared to beginning WIP, which already has some work done before in the previous period. How about work in process ending? Work in process ending is practically the same like weighted average as well. We just need to calculate how much work done have been done for the work in process ending, or practically how much work done has been done in the current period for the ending inventory. This case, once again, transferred in cost is always 100%, so 3,700. And then in this case, for direct materials, it has not been added, so it's zero. While for conversion cost, it's 60% once again, so 2,220. Then we sum it up, we'll get 22,500, 26,300, 23,27, 23,270. Just a reminder, the amount of units to account for and accounted for needs to be the same. However, unlike weighted average, in Fifo, the equivalent units for transfer in cost does not necessarily have to equal the accounted for or to account for. But in weighted average, it has to be equal. Here, 3,000, 3,000. Okay, so that's for Fifo. Now we found the equivalent units, right? So once again, we need to allocate the cost based on the equivalent units. To do so, first, we need to list out all the costs available to us. Okay, so here we need to find the total cost accounted for, right? As you can see, there are some minor differences. Why? This is because, well, the question states so. Here we can see, where is it? Here, that total transferred in cost of beginning work in process on October 1 are 2,881,875. So we input 2,881,875. For the DM, once again, it has zero cost value. Why? Because the DM have not been added at the previous period, right? So at the very least, the WAP beginning has the DM value of zero when the process started. For conversion cost, since it was 70% complete, well, the 70% does not really matter as we already get the information here, just 835,460. So once again, we sum it all up to get this value, 3,717,335. Then we find out or we calculate the cost added in current period. Once again, these are all information available from the question. So first of all, the transferred in cost is a bit different than the one in weighted average, as stated in the question. Total transferred cost added during October 7,735,250 instead of the previous one. Whereas the rest, since the question does not state any differences, will be equal to the previous one. And then if we add all of them, we'll gain 21,395,850. Then once again, we'll find the total cost to account for. Here we go. These are important information. Now, all right. Now, another distinct feature of Fifo, aside from separating these two, here as you can see, they're both separated or distinct, classified differently, is that we calculate the cost per equivalent units using the formula cost added current period divided by equivalent units. So here you can see the difference here is we use cost added in current period compared to weighted average where we use cost incurred to date. So the logic is in weighted average, we also include the value of the WAP beginning and allocate them equally to the other products or other inventory. However, for FIFO, as it's first in, first out, we do not do that. We only calculate or allocate the cost added in the current period. Here we can see the difference. Okay. So if in weighted average, cost incurred to date, we use this total cost to account for, right? But in FIFO, we use cost added in current period. So the formula or the data used in the formula is equals to the data found in the row cost added in current period. So if we found them, this is 7,735, 9,704,000, 3,955,000. Then once again, we just input the equivalent units that we get from the table, the equivalent unit table, and we'll get 22,500, 26,300, and 23,270. This is the equivalent units. And from that, we can calculate the cost per equivalent units. In here, once again, the formula is just literally cost added in current period divided by equivalent units. Here we'll get cost per equivalent units of 343, 369, and 170. Excuse me, let me drink for a little bit. Okay. Now, once again, same method as weighted average or same approach to allocate the cost to various accounts. We just calculate the cost per equivalent units multiplied by the equivalent unit of that account. Okay, but first in this case in FIFO, we need to know we need to state the value of the WAP beginning first, as this is not calculated through this method, but it's just simply stated. Why? Because we only use cost added in current period, right? So okay, WAP beginning. So WAP beginning first have a value of 3,707,000. Then from that, we calculate the cost added to beginning WAP in current period. So we need to calculate the cost added to the beginning work in process to finish the beginning work in process and transfer it out. Once again, since this FIFO, so yeah, we assume this first in, first out. So we just allocated to cost added to beginning work in process inventory. So how do we calculate it? Once again, it's just cost per equivalent unit times 2 times the equivalent unit from beginning WAP. This case is the equivalent unit or from beginning beginning WP in this section. Right, so the first one is 0, since 0 equivalent units. The next one, we have 369 multiplied by 7,500. So we predict the cost, the direct material cost needed to finish the work in process beginning. We'll get 2,767,500. And then next one, we multiply 170 with 2,250, or practically the conversion cost needed to complete the beginning work in process, which is 382,500. So from this, we will have a sum of 3,150,000. Now, from this, we will find the total value of the beginning inventory when it is transferred out. Yeah, so practically we just sum the values, and we'll get 6,867,335,000. Is there? Here we go. We just sum them up. Then next, we need to find the cost allocated to started and completed. Since, yeah, we classify WP beginning and started and completed differently in the Fifo method. This time, once again, same approach, 343.79 multiplied by 18,800. Get 6,463,000. Same thing for direct materials, multiply it 369 by 18,800. We'll get 6,937,000. And then for conversion cost, same thing, $170 multiplied by 18,800. So from it, we can have a total sum of 16,596,000 for the cost of units that are just started and completed. So from this, we can sum up the total cost of units completed and transferred out. In it, we'll get the sum of 6,867 plus 16,596,000, which we will get 23,463,766. Just sum this up as well, so we can categorize them. And then the last one, we need to find out the cost allocated to WP ending. Okay, to work in process ending. Once again, same approach, just multiply cost per equivalent units to the equivalent units in the WP ending. In this case, transferred in costs, or the equivalent units of transferred in cost in work in process ending, is 3,700. So we just multiply it to 343.79. Then we'll get 1,272,018.89. Okay. Then same thing, same principle. This time, since the equivalent units of direct material is 0, since we haven't added any direct materials to work in process ending, the cost, of course, is 0 as well. Then last one, we get 377,400 from $170 per equivalent unit times by 2,220 equivalent unit. And we'll have a total sum of 1,649,418.89. Okay, so this is total sum. And if you sum WP ending, the cost of WP ending, and total cost of units completed and transferred out, we'll have a total sum of 25,113,185. Same goes for each category. Now, once again, as you can see, the total cost accounted for must be equal to total cost to account for. If it's not equal, that means there must be a mistake somewhere. But just because it's equal doesn't mean it's necessarily right. Does not mean it's necessarily right, since the allocation might be somewhat wrong. But in essence, to get the answer right, you need to at least get this equal to. Get the total cost to account for and total cost accounted for to be equal. All right, next, we're going to journal entries once again. To be honest, the journal entries between FIFO and weighted average are literally the same. So the only difference is, once again, the allocation of the cost, or practically the quantity of the journal or the value of the journal. In this case, WP testing is 7,735,000. Since this is found here, once again, 7,735,000. While the cost of goods completed or the journal for cost of goods completed and transferred out from a, sorry, this is from testing to finished goods, is simply using this here, this value here, total cost of units completed and transferred out. We'll have, yeah, all right. There, okay, it's practically the same. So this is for FIFO. Um, Maybe a little fun fact. If the beginning inventory and ending inventory are the same, assuming if the beginning inventory and WP and ending inventory is the same, and the costs are practically the same, the total cost accounted for both in weighted average and FIFO will be equal. Uh, yeah, will be equal. The only thing different will be the allocation between the component transfer out and WP ending. Maybe as an example or as an illustration, if I did not change the transferred in cost, let's say the transferred in cost is still 2,932,500, and this is still 7. Nah, you can see that the total cost to account for is practically equal. So if the cost stays the same, there's no difference in total cost between FIFO and weighted average. So what's the difference? The only difference is the allocation once again. Here you can see that 1,646,000 is allocated to WP ending for FIFO, while for weighted average is 1,686,000 for 60. Yes, a little bit different. As you can see, the allocation is different. While for weighted average, completed and transfer out allocated 23,459,000, while for FIFO is 23,499,000. So yeah, that's a little bit of information. That's practically just to prove that the only difference in weighted average and FIFO is the difference in allocation of WP ending and total cost of units completed. Of course, that's assuming the beginning and ending WP are equal and that the costs are equal. But usually it's not. Yeah, okay. So once again, that's the answer. All right. So practically that's for process costing. Uh, well, I guess in essence, all you need to do for process costing is just remember to always make the equivalent unit stable and remember to make the cost table. And the difference between weighted average and FIFO is in the classification of completed and transfer out during current period. Remember, in FIFO, beginning WP is differentiated from started and completed. And in FIFO, we calculate the work done needed to complete the WP, or the remaining work done needed to complete the WP. Aside from that, in FIFO, we also use cost added in current period to find cost per equivalent units. Compared to weighted average, in weighted average, you clump WP beginning into one. So you practically just classify WP beginning and started and completed as one category. In this case, completed and transfer out during current period. And you assume or you practically calculate the equivalent units or multiply it just by 100%. And once again, the difference here is that we use cost incurred to date or the whole cost or total cost to account for to calculate the cost per equivalent units, not cost added in the current period. Okay, so that's practically for process costing for FIFO and weighted average. Are there any questions so far? All right, if not, let's just continue. Now we'll be going to spoilage. Okay, so spoilage is practically, in my opinion, the final major section. So let's go through a little bit
Kak,
of,
Kak,
yeah.
I think Rajab want to ask.
Oh yeah. Go ahead. Go ahead. Hello. Hello. Oh, Rajab, ya go ahead, silahkan. Oh, oke. Wait, ini panitia gimana? From the committee, is it okay? Take a short break or? Hello?
Nggak apa-apa Kak, 10 menit.
Oh,
Break dulu aja.
oke.
15 menit nggak apa-apa kok.
Kalau gitu kita break. Ini gimana, panitia mau 10 menit atau 15 menit nih? Oh, ya udah kalau gitu kita
aja.
break. Kenapa? Gimana?
10 menit aja.
Oke, sip. Kalau gitu kita break 10 menit ya. Ya udah, nanti saya juga balik 10
Oke,
menit.
thank you Kak.
Thank you. Mungkin karena udah 10 menit, apa bisa mulai lagi atau
Boleh dilanjutin aja.
okay. Okay, so we'll be moving on to what I think is the final major section, which is practically chapter 18 or spoilage. All right, so just go into spoilage. So for spoilage, of course, it'll be differentiated between spoilage in process costing and spoilage in job costing. But before we go there, we'll need to know, of course, about the definition of spoilage. So what is spoilage? Spoilage is practically units of production that do not meet the specification and are discarded or sold at reduced prices. So that's practically spoilage. Later on, spoilage can be divided into two types of spoilage: normal spoilage and abnormal spoilage. The difference is that normal spoilage is considered to be a normal thing or a normal byproduct in the process, where abnormal tends we consider abnormal spoilage as something not normal or it occurs due to extraordinary events. Now, usually, normal spoilage will be included in cost of goods sold or the cost of goods, while abnormal will be considered as an expense or a loss. Now, aside from spoilage, we also have two types of somewhat spoilage. No, it's not really spoilage, but two types of defects, let's say. The first one is rework. What's rework? Rework is practically units of production that do not meet the specification required, but are subsequently repaired and sold as good finished units. So it's practically units that are actually defect, but then we repaired them, and then it can be sold as normal goods or normal finished goods. And then the third one is scrap. What is scrap? Scrap is practically a byproduct or residual material from manufacturing processes. All right. So we need to know how to account for spoilage in both process costing and in job costing. For process costing, the simplest way to explain, since there's practically no theory, is that we'll be allocating normal and abnormal spoilage in the table as well. So let's say for weighted average here, aside from completed and transfer out during current period, we will also have to calculate the equivalent units of, let's say, let me insert normal spoilage. And then aside from that, if there are any abnormal spoilage, we will also need to calculate the equivalent units of abnormal spoilage. And from there, we will automatically calculate the cost allocated for normal spoilage and abnormal spoilage down below here. I think for process costing, it's best to just practice since it's very practical. And yeah, it's not really theory based. Well, for job costing, it's a different thing. In job costing, to recognize spoilage, we tend to just, or it's easily calculated, the cost is easily calculated, and we can just use accounts or journals to dispose of it. Right, so first we'll go to spoilage. Now, spoilage in job costing, if it's attributable to a specific job, we will recognize leftover value and we will make a journal of debit materials control and credit work in process control based on the residual value or the leftover value. That's if it's attributable to a specific job. What this means is that the rest of the cost or the loss in value, which is the original value minus leftover value, will stay in the work in process control of that specific job. What it means is that the cost of the spoilage will be added to the work in process control of that specific job. That's why if it's attributable to a specific job, we only debit materials control and WIP control based on the leftover value. However, it will be different if it's common to all jobs. If we assume the spoilage is common to all jobs, we will, once again, in theory, the journal is debit materials control based on the leftover value. And then we also debit the MOH control with the amount of the loss in value or original value minus leftover value. And we will credit WIP control as much as the original value. Maybe to illustrate, I'll type it here. Well, to specific job. Here we'll make a journal entry of materials control. Sorry. And then weight by control. Now if it's common to all job, this a little bit. If it's common to all job, we'll debit material control. We will also debit MOH control. And we will credit weight by control. Okay, so here. Now the amount, this is residual value. This is also residual value. This is residual value. This is original value. This is the loss in value. So as you can see, if it's common to all jobs, the loss in value is allocated to MOH control instead. But if it's attributable to a specific job, the loss in value will just stay in weight by control, as in it will be added to that specific job. But if it's common to all jobs, the loss in value will be added to MOH control. Okay, that's for common to all jobs. But that's assuming it's normal spoilage. What happens if it's abnormal? If it's abnormal, it's pretty much same principle with common to all jobs. But instead of allocating to MOH control, since we assume it's abnormal, we just admit it as a loss or as an expense, loss from spoilage. That's for spoilage and the journal entries needed to make it. Now there's another one, of course, which is rework. Here we have rework. Okay. Once again, rework can also be divided into 3 different scenarios. If it's attributable to specific job, if it's common to all job, and if it's abnormal. Okay. So let me move this here. If it's attributable to a specific job, the journal entry we need to make on a rework is weight by control, material control, wages by control, and MOH allocated. Or this actually depends, this 3 journal depends on what resources we use to rework that product or service. But essentially we debit weight by control and we credit material control, wages payable control, and MOH allocated. The logic is that if there's a certain product or services that needs rework, and we know that that rework is specifically for that job, we can just add the amount of resources needed to rework it or to repair it into a finished goods into the account itself or weight by control for that specific job. Now, if it's common to all jobs, if we think that the rework is not attributable to a specific job and that it practically applies to various jobs, we make a similar journal entry, but instead of allocating the additional resources used to rework it into that specific job, we allocate it to MOH control or practically to all jobs, to various jobs, MOH control. So we debit MOH control. Now, if it's an abnormal rework, if we think that this rework is caused by extraordinary events, or if it's not normal, same principle to spoilage above. So instead of moving it to weight pair MOH control, we just admit it as a loss from abnormal rework. Now that's for rework. Now, if it's next, we'll be accounting for scrap. Okay, so scrap is a little bit different since scrap is practically residual material. So it's not something that we need to fix, or it's not something that's lost in value. So for scrap, there's 2 different scenarios. So if a scrap is immaterial, if we assume that the value of the scrap is, well, not significant at all, we just recognize the scrap at the time of the sale. So if it's immaterial, yeah, we just recognize it at the time of sale as if like, oh, So we just apparently sold something from our scrap. Since it's immaterial, we didn't even care about it, or we don't really pay attention to it. If that happens, the journal, when it's sold, is cash to AR and scrap revenue. Easy enough, pretty straightforward. We acknowledge revenue and we gain cash. If it's immaterial, we only recognize scrap at the time of sale. As in, of course, we don't even need to care about it when it's stored. However, for example, if we use the principle of recognize at time of sale, and that in our opinion, the scrap is material, there are two different possible scenarios. One, oh, this is recognized. Okay, where is it? Sorry, material. Okay. One, if it's specific or attributable to a specific job, in which we will use cash. And since it's material, we can use this scrap value to reduce our cost of goods, or which is why we credit pay control. Since if we know that, oh, this scrap is from this specific job, and I think it's quite material and quite significant, so practically the cost that it takes to make goods are less than usual. So yeah, we credit pay control and we debit cash or AR. However, there's also the case if it's common to all jobs. If it's common to all jobs, in principle, it's the same journal, except that instead of crediting or reducing the cost of a specific job, we reduce the cost of various jobs, or we reduce the MOH control. Now that's for recognize at time of sale. However, aside from recognize at time of sale, there's a different approach, which is recognized at time of production. Or at production. Once again, there are two possible scenarios. First is attributable to specific job. Now, if we recognize at the time of production, we need to record the journal when it is stored in the storeroom, since we recognize the scrap at the time of production or at production. We're like, oh, so there's scrap at production. Okay, that means we need to make sure or pay attention to its movement. In this time, we need to pay attention to its movement to the storage room. If we move it to storage, we debit materials control and we credit pay control. So once again, we reduce the cost of that specific job, but this time, since we recognize it at production and we store it first, we recognize its presence in the storage by adding materials control. Now, when it is sold, the journal will simply be cash or AR, credit materials control. So yeah, we acknowledge that our scrap from the storage room is sold, so it's reduced, and we get cash in exchange. Now, aside from attributable to specific job, like before, there's also a scenario if we assume that it is common to all jobs. If it's common to all jobs, once again, same principle or same journal, except that instead of work in process control, we use MOH control, or we credit or we reduce MOH control. However, the journal when it is sold is also the same. So this is practically a summary for spoilage in job costing. So to implement the theory, let's just jump straight to the problem. Okay, so problem 5. Jellyfish Machine Shop is a manufacturer of motorized cart for vacation resorts. Patrick Cullen, the plant manager of Jellyfish, obtains the following information for job #10 in August 2017. A total of 46 units were started and 6 spoiled units. Okay, so some key phrases or key data. 6 spoiled units were detected and rejected at final inspection. Okay, yielding 40 good units. the spoiled units were considered to be normal spoilage. Okay, so we know this is normal spoilage. Cost assigned prior to the inspection point are 1,100 per unit, $1,100 per unit. Or the current disposal price of the spoiled units is $235 per unit. When the spoilage is deducted, the spoiled goods are inventoried at $235 per unit. All right. So the first question: what is the normal spoilage rate? Okay, this is pretty straightforward. The formula for a normal spoilage rate is normal goods spoiled, or goods considered normal spoilage, or spoilage goods, which are considered normal, divided by the amount of goods transferred out, of good units transferred out, good units completed. Okay, so in this question, we already have the amount of spoilage goods that we consider normal. That's 6, right? So this is equals to 6 divided by, and we already know that the good units completed is 40. Out of the 46, only 40 is completed and still good, right? So we just divide that, and we'll get the answer 15%. So the answer for number 1 is 15%, simply like that. Okay. And then here, prepare journal entries to record normal spoilage assuming the following. All right, so as mentioned before, we just need to prepare the journal entries. First of all, if it's attributable to a specific job or related to a specific job. Once again, this just Swipe theory, or according to the theory, where if it's attributable to a specific job, we debit materials control and we credit work in process control. So how about the amount? We only credit and debit the residual value, or the value of the spoilage goods, of the spoiled goods. Here it says that it's inventory at $235, right? Where is it? Per unit. So all we need to do is just $235 per unit times the 6 units of spoiled, 6 units spoiled. So we know, so we have a total of, here we go, $1,410. Here, disposal price and spoilage units. There, here we go, $1,410. Now, why is it just like this? Well, because as you can see, the rest, or the loss in value, which is 1,100 minus 235 times 6, this 5,190 will be left in the work in process control. So, for example, it was 1,100 per unit, right? So normally, if 40 goods are completed without any spoilage, we'll have an inventory value or cost of 40 times 1,100, 44,000, right? However, since in this case, 6 spoilage units are detected, and we know that it is attributable to a specific job, we know the cost of goods of units completed will be 44,000 plus the loss in value of the spoiled units, which is this times by 6. So for this 40 good units. As you can see, we allocate more costs into the 40 good units due to the spoilage, due to the normal spoilage. So this is the difference. Okay. That's for attributable to a specific job. Now, if it's common to all jobs, once again, according to the theory, so we debit materials control for the residual value to acknowledge that, well, there's at least some residual value left in the materials control now, which is 235 times 6, which is 1,410. And then we credit the whole value, or the total value of the spoiled goods before it is spoiled, or 6 times 1,100, the cost assigned to it, which we will get 6,600, while we debit manufacturing overhead control by the difference or the loss in value. In this case, we will get 5,190. As you can see, in the first case, in the first scenario, the $5,190 is allocated to this specific job or to this specific good units, to this specific batch of good units. However, if it's common to all job, if we think it's common to all job, we allocate the $5,190 to manufacturing overhead control instead. That's practically how it works in principle. How about abnormal spoilage? Same thing, same journal, and it's practically same quantity or same amount as scenario B, except that instead of manufacturing overhead control, we allocate the loss in value to loss from abnormal spoilage, or we just expense the loss in value to loss from abnormal spoilage. That's if it's abnormal. Because as we think it's an extraordinary event, it is not necessary or it is inaccurate to add this loss in value as a cost to produce the good units, since it is not normal. It is not normal in the process of production. That's for abnormal spoilage. Okay, that's for problem 6A. 6A, sorry, 5A. Now we're going to problem 5B. Assume that the 6 spoiled units of jellyfish machine job 10 can be reworked for a total cost of 1,800. The total cost of 66,600 associated with these units has already been assigned to job 10 before the rework. Sorry. Prepare the journal entries for the rework assuming the following. All right. Once again, refer to the explanation above. If a rework is attributable to a specific job, we'll need to debit work in process control and credit materials control, wage payable control, and manufacturing overhead allocated. Okay, a total cost of 6,000. All right. Okay, so just instantly, so we debit work in process control based on the total rework cost. Okay, 1,800. How about the credit materials control, wage payable, and manufacturing overhead allocated? Okay, since in this case, the question did not really state how much or the proportion, in this case, we can assume that's just $1,000, $500, and $300. Since this is not assumed yet, we can just assume how much is the proportion, but usually they will actually state the proportion. For example, materials control, we use how much of materials control, for example, $800. Okay, next one. B, if the normal rework is common to all jobs, same principle, just use 1,800, 1,500, $300. The only difference is, once again, instead of allocating the rework cost to work in process, we allocate the rework cost to manufacturing overhead control, since we assume the rework is common to all jobs. Okay, next one, abnormal rework. If we assume it's abnormal rework, same principle. Here we go. This time it's just loss from abnormal rework, $1,800, and it's the same credit entry. So once again, instead of manufacturing overhead control or work process, we allocate it as an expense to loss from abnormal rework. Okay, that's practically for number B, 5B, sorry. Okay, next one is problem 5C. Assume that job #10 of jellyfish machine shop generates normal scrap with a total sales value of 700. It is assumed that the scrap returned to the storeroom is sold quickly. Prepare the journal entries for the recognition of scrap assuming the following. First, the value of scrap is immaterial and the scrap is recognized at time of sale. Okay, just like how I mentioned before, if it's immaterial, we just recognize it at time of sale, where we just make the entry debit cash, credit scrap revenue based on how much we get. In this case, we get $700 of total sales value. So we just debit $700 to cash and we credit $700 to scrap revenue. Then next, B, if it's material and related to a specific job and it's recognized at the time of sale. Here, value of scrap material related to a specific job and recognized at the time of sale. Once again, the same thing. Sorry. This time it's cash, but we credit work in process because we acknowledge it's material. So so we can reduce the cost of good units produced or the work in process cost. So this time we debit cash 700 and we credit work in process $700. That's for material related to a specific job. Now, if it's material common to all jobs recognized at the time of sale, practically same principle, except that we credit manufacturing overhead control. Once again, the logic is the same. If we assume that the scrap is material, we can reduce the cost of the goods produced. In this case, if we know that the scrap is traceable from that specific job, we can reduce the cost from that specific job. Hence, why we reduce work in process. In this case, work in process for, let's say, job 10, since the question says job 10. However, if we think it's common to all jobs, instead of reducing the cost of that specific job, we reduce the manufacturing overhead control, which will be allocated through two various jobs, right? So that's the difference. Okay, if it's material and recognized as inventory at time of production. Here we go, the value of scrap is material, and scrap is recognized at inventory at the time of production and is recorded as NRV, or NRV is not realizable value. Right, so once again, if it's returned to the storeroom, we need to make a journal entry to acknowledge as transfer to the storeroom, or to acknowledge as transfer back to material control. So we debit materials control 700 and we credit manufacturing overhead control $700. Okay, then the next one is when it's reused. This is reused. Scrap is recognized. Okay, so it's actually not mentioned, so this is practically optional. But if we reuse the scrap, we need to make a journal entry of debit work in process control as much as the same amount of the one we credit. And we credit material control, $700. Okay, that's practically for problem 6C. Oh, if it's sold, then we will recognize cash or AR, and we will recognize materials control as much as the sales value as well. Now, this is assumed we use manufacturing overhead control, assuming it's common. Okay, here we go. If it's specific, we change the MOH. We use WP control instead of manufacturing overhead control. Okay, that's practically it. All right, that's practically spoilage for job costing. It's actually pretty simple, but we just need to memorize all the journals and the possible scenarios. So once again, the possible scenarios, if for spoilage, if the spoilage is attributable to a specific job, common to all jobs, and if it's abnormal spoilage, in which the difference will be the loss in value where it is allocated to. If it's attributable to a specific job, the loss in value will stay in WP control. If it's common to all jobs, the loss in value will be allocated to MOH control. If it's abnormal, it will be allocated to loss from abnormal spoilage. Now, normal rework, there's for rework, same scenarios. There's attributable to a specific job, common to all jobs, and abnormal rework. If it's attributable to a specific job, we allocate the rework price or the rework cost to WP control. If it's common to all job, MOH control. If it's abnormal, loss from abnormal rework. And then for scrap, this is one a little bit more complicated. First, for scrap, we need to discern whether it's material or immaterial. If it's a material, we just recognize it at the time of sale, and we just acknowledge cash and scrap revenues. However, if it is material and we recognize it at the time of sale, we recognize cash and we instead decrease our expense. For if it's related to a specific job, we decrease our expense for that specific job. But if it's common to all job, we decrease our MOH control expense or manufacturing overhead. And if it's material and we recognize it as inventory at the time of production, all we need to do is that we recognize its movement back to materials control or back to the storeroom, where we debit materials control and credit manufacturing overhead control if it's common to all job, or credit WP control if it's specific or related to a specific job. And well, if it's sold, if after recognizing it as inventory, it's sold, we debit cash or AR and we credit materials control, or credit the amount of scrap we acknowledge in the storeroom, or yeah, and the amount sold. If we reuse it, we just debit work in process control and we credit materials control. Okay, that's for problem 5. Now we're going to spoilage in process costing. Okay, this is a bit, right. Let's just go with this. Problem 6. In the seafood company's packaging department, company costs are added evenly during the process, and direct materials are added then process. Spoiled units are detected upon inspection at the end of the process and are disposed of at zero net disposal value. All completed work is transferred to the next department. The transfer in cost for May equal the total cost of goods unit completed and transferred out in May from the cleaning department, which were 90,922. Summary data for May follow as follows. Okay, so required. For the packaging department, use the weighted average to summarize total costs and assign those costs. Okay. So it's practically, we use weighted average method from process costing to assign costs. And here we have the Fifo method. Okay. So it's practically similar to problem 4, except this time we have spoilage and abnormal spoilage. Okay. So let's do this one by one. All right. So once again, following our usual method, we need to know WP beginning, start during current period, and we need to know the total units to account for. Okay, here it's already provided by the question. Next, this time, because there's spoilage, we need to know the goods unit completed and transferred out. Since this weighted average, we have not classified beginning WP differently yet. And then this time, we have to classify the costs allocated to normal spoilage and abnormal spoilage. So how do we calculate normal spoilage from here? Okay, so we already have WP ending and we already have goods unit completed and transferred out. And in the question, here where this, okay. In the question, we are provided with the spoilage rate. Here is normal spoilage as a percentage of good units. So it is 8%. We know that 8% of the good units completed will be normal spoilage. So easy enough, 8% times 26,400. So we know we have 2,112 normal spoiled units. How about abnormal spoilage? Well, since we already have the normal spoilage, good unit completed, and WP ending, we just need to reduce these three amount with the total units to account for. And we will get an amount 288. Once again, remember, accounted for units needs to be equal to account for. Now we already have these physical units. We already know the physical units. So how about the equivalent units? Once again, in weighted average, goods unit completed and transfer out during current period is always 100%. Since we assume we started from the beginning and we completed, right? So work done is 100%. So just times it by 100%, 26,400. How about for normal spoilage? Now, when calculating equivalent units in normal spoilage or abnormal spoilage, we need to know the inspection point. So what exactly is the inspection point? It's the point in the process of the production in which we check for spoilage or not. In this case, we can see here. In this case, the question provides the degree of completion already. Degree of completion normal spoilage, 100%. Degree completion of abnormal spoilage, 100%. Okay, for both direct materials and conversion costs. Okay, so we know that all their degree of completion is 100%. However, sometimes if the question does not provide directly the degree of completion, sometimes they will mention the inspection point or the inspection point. After that, from the inspection point, we will have to determine the degree of completion. For example, in this case, we can say 100. If the degree of completion is 100%, we know that the inspection point is at the end of the process. Here we go. Spoiled units are detected upon inspection at the end of the process. However, for example, if it's not 100%, let's say the spoiled units is detected at 80%, then we know that the degree of completion for the conversion cost for normal and abnormal spoilage will be 80%, assuming conversion cost is added evenly. Whereas for direct materials, well, it will depend on where the direct materials or at what step of the process are the direct materials added. If the direct materials are added after the inspection point or 80% point, then it will be 0%. But if it's added before the 80% or inspection point, it will be 100%. In this case, it's all simply 100%. So we just need to times it by 100%, 100%, 100%. Remember, in weighted average, usually transferred in cost is always 100% degree of completion. So it's just 100%, easily 100%. How about way pending? Same principle. We find the degree of completion. In this case, the degree of completion is 100%, 0%, and 40%. So we just multiply it by the physical units. All in all, we get a total of equivalent units as this. Remember, in weighted average, equivalent units of transferred in costs will always be equal to the units accounted for or to account for. Okay. Then once again, we add the cost, or we calculate the cost. Here, the costs are already given by the question. In this case, conversion cost 23,000, transferring cost 33,000, and total costs added in current period. Where it is? It's here. There we go. 90,922. Okay, 90,922 for transferred in costs. And then 5,760 for direct materials, and then conversion cost of 4,845. Then we add them all to get total cost to account for. Once again, since this is weighted average, we divide cost incurred to date with equivalent units to get cost per equivalent units. In this case, the equivalent units is 37,200, 28,800, and 32,160. And we will get a cost per equivalent units of $3.35, $0.2, and $2. Okay. Since we already know cost per equivalent units, now all we need to do is start assigning them. Once again, to assign them, we just need to multiply cost per equivalent units times the equivalent units based on each category, and based on each account as well. In this case, goods unit completed and transferred out for direct material for transfer in cost has an equivalent unit of 26,400. So we just multiply it by 3.35. We'll get the following. Wait, sorry. So I forgot. Since there's normal spoilage and abnormal spoilage, we differentiate the goods unit completed and transferred out into two different sections, which is cost before adding normal spoilage. In this case, we'll use this one, goods units and transferred out during current period, and the normal spoilage itself. Since normal spoilage is added to the cost of goods manufactured, both of them will create total cost of goods unit completed and transferred out. And then we will allocate several of the costs to abnormal spoilage, which we will expense later since it's abnormal, and we will allocate it to a pending. Once again, sorry. Okay, this one is simple, 3.35 times 26,400. Okay, we'll get this. And then same thing for direct materials and conversion cost, just multiply it. Okay, wait, I think this was, okay. Yeah, all right, here we go. And then we sum it, and we'll get 146,520. Same thing that applies, for normal spoilage, we multiply cost per equivalent unit to the equivalent unit done on normal spoilage. In this case, 2,112. We'll get 7,075, 420, and 4,224. We sum it all up, we'll get 11,721. And then we add them both to find the total cost of goods unit completed and transferred out. If we sum them, we'll get 158,241.60. And then since there's an abnormal spoilage, we will classify abnormal spoilage differently. In this case, we just allocate the cost to abnormal spoilage individually or distinctively. Once again, using the same approach, cost per equivalent units multiplied by the equivalent units that done in abnormal spoilage. 3.35 times 288. 964. Same thing here, 0.220 times 288. And 2 times 288. We sum them all up, we will allocate a total of $1,598.40 to abnormal spoilage. Same thing applies to a pending. This time it's just 3.35 times 8,400. This one, since there's no work done on direct materials, it's 0. And for conversion cost, 6,720. And we'll get 34,860. Okay. So if we compare it to the previous one, here, okay. If there's no spoilage, we just categorize. We only have two distinct categories in weighted average method: completed and transferred out, and WP ending. However, if there is spoilage, we need to differentiate them. We need to differentiate the cost before adding normal spoilage and the normal spoilage, in which the total will get total cost of goods unit completed and transferred out, which is the same thing as completed and transferred out. And we need to differentiate abnormal spoilage with the others as well. So we differentiate abnormal spoilage and we allocate cost to it. And also we differentiate work in process ending. Once again, make sure that the total cost to account for is equal to the total cost accounted for. All right, so that's for weighted average. And then next, we're asked refer to the information above except that transfer in cost of beginning work in process are 33,000 instead of 33,698. And transfer cost for May equal to the total cost of goods unit completed and transferred out in May from the cleaning department, which were 90,510. For the packaging department, use the Fifo method to summarize the total cost to account for and assign those costs to units completed and transferred out, to abnormal spoilage, and to units in ending work in process. All right, so same thing as problem 4b and similar to problem 6a, except that this time we use the Fifo method. Once again, we just need to calculate the total physical units. It won't be different like the one before. Once again, this is 8% from 26,400. This is 288, which is the remainder, and the WP ending is as provided. However, this time we differentiate beginning WP or beginning work in process and started and completed, like what we did in problem 4b for Fifo. So we differentiate this. And now we'll need to calculate the equivalent units. From beginning WP, once again, to calculate the equivalent units in Fifo, we'll calculate the remaining work done remaining. In this case, since transferred in cost is already 100% in the previous period, the remaining work done for transfer in cost is 0. For direct material, since it's already 100%, since it's still 0%, it will be full or 100%, 12,600. For conversion cost, since it's 40%, the remaining work done is 60%. Go. Yeah. Oh, sorry. Why 40%? I mean 70%. Sorry. This is work in process. Degree of completion of beginning work in process, 70%. So it's 100 minus 70% or 30%. For started and completed, since it's started and completed, they're all multiplied by 100%. Then we'll get a total of goods unit completed and transferred out of 26,400 in physical units, 30,800 in equivalent units, 26,400, and 17,580. Then, once again, like before, we need to differentiate the good units and the normal spoilage and abnormal spoilage. Same principle like the one previous. We multiply the physical units with the degree of completion to find the equivalent units. Transferring cost is 100%, and direct materials is also 100% in this case. Conversion cost is also 100% in this case. We follow this table here provided, 100%. Same thing for abnormal spoilage, 100%, 100%, 100%. Now for WP endings, the same like weighted average before. We just need to multiply by degree of completion. In this case, it's 100%, 0%, and 40%. 100%, 0%, 40%. and we'll get a total of here, this equivalent units. Once again, make sure accounted for is equals to account for. Now that we have gotten the equivalent units, once again, to calculate the cost per equivalent unit in FIFO, we use cost added in current period. Now, this time, our value of transferring cost in WAPE beginning is 30,090. Whereas for the cost added in current period, this time as provided is 90,510. Okay. Then we sum it up to get our total cost to account for. And once again, we put them here in cost added in current period. 90,510, 5,760, 40,845. And then once again, we just input the equivalent units, 24,600, 28,800, and 23,340 to find the cost per equivalent units. And then once again, to assign cost, we multiply cost per equivalent units times the equivalent units. Okay, so for the first one, WAPE beginning. WAPE beginning for FIFO, once again, we do not use this approach as it's already provided, which is equals to this one, the WAPE beginning value, 33,000, 23,435. But we do calculate the cost added to the beginning work in process, which is the cost per equivalent units, once again, multiplied by the equivalent unit from beginning WAPE in the equivalent unit table above. This is 0 times 3.68, so it's 0. This is 0.20 times 100% at 12,600, sorry, here. Then this is 3,780 times 1.75. And we'll get a sum of 9,135. From those two, we'll get our total from beginning inventory before normal spoilage. Remember, this time there's normal spoilage, so we need to differentiate them. Then we also have the next category, started and completed before normal spoilage. In this case, same principle. We multiply cost per equivalent units with the equivalent units from started and completed, which is just 3.68 times 13,800. Same thing, multiplied by 30,800. Same thing for conversion cost. We'll get a total sum of 77,683.90. Then we also need to calculate the allocation of cost for normal spoilage to get the total cost of goods unit completed and transferred out, which is practically normal spoilage plus started and completed plus total from beginning inventory before normal spoilage. So same principle, cost per equivalent units multiplied by equivalent units in the normal spoilage. Same thing, multiply, we get 7,770, 420, and 3,696 to get a total of 11,889.01. And then we sum these three and we'll get total of 155,272.92. Same thing for each category. Once again, aside from total cost of goods unit completed and transferred out, we also need to allocate the cost to abnormal spoilage. Now, abnormal spoilage, once again, since it's abnormal, it's not included as a cost of good. Instead, it's expense, but we still need to find the allocation of cost. Same principle, cost per equivalent units times multiplied by the equivalent unit of abnormal spoilage. So it's just practically 3.68 times 288, 0.20 times 288, and 1.75 times 288 to get a sum of 1,621.23. Then final one, WAPE ending, is practically the same like the previous process costing answers. Just multiply cost per equivalent unit with the equivalent unit WAPE ending. This case is times 8,400 times by 0, and then this is times by 3,360. Then to get a sum of 36,785.85. Now notice that all these three has an equal sum of 193,680. Same sum as the total cost to account for. As we can see, they're all equal. So yeah, once again, make sure that they're all equal. All right. With that, that's all for our lesson. Thank you. Sorry if I made any mistakes. If there's any question, feel free to ask. Yeah. Eh, ya, udah.
Udah ya, Kak?
Hmm.
Oke, thank you banget ya, Kak. Udah ngajarin. Banyak banget lagi latihan soalnya. Thank you juga buat
Iya.
teman-teman yang udah pada datang. Nanti recordnya bisa ditonton lagi kok di YouTube.
Oke.
Thank you ya, Kak.
Thank you ya. Semangat kalian semua buat AB bisa kok cost accounting. Semangat ya. Nanti jawabannya saya send ke itu aja ya. Najla ya.
Ya,
Oke. Thank you ya. Saya izin live nggak apa-apa.
ya nggak apa-apa, Kak.